Let's talk a little bit about how you see the rest of this year. The numbers have gone down really well. The only thing that I'm hearing is that your guidance is a little bit vague for 2024. Is that deliberate, and if so, why?
Well, look, I mean, we've registered 3 consecutive years of double-digit growth of the top line and the bottom line, and we've way outperformed our reference markets, taking market share across the board. Now, if you look at the market last year, it was pretty subdued because coming off, the revenge conviviality post-pandemic, consumption normalized, stocks went down across markets, but we actually did very, very well across all of our key brand market combinations. Now, if you look at it this year, I mean, we are pretty confident about the momentum of our brands. Having said that, there are a lot of different moving parts, particularly on the COGS side. We just wanted to have a few months under our belt before we expressed anything.
Would you say the risk is to the upside? You're being cautious, it sounds like. You're waiting to see what is happening here. Is your expectation that actually it's going to be another good year? Would that be your kind of base case? I know you're not going to give me details, but are you feeling positive?
Well, as I said earlier, I mean, the most important thing is that our brands are very, very healthy and that to have a very healthy top line and continue taking market share.
Okay, so that's the outlook in terms of that's the outlook for this year. Bob, good morning. Thank you very much for joining us. Can I ask you about M&A? You've clearly done quite a bit of M&A as you've reshaped this business, and we know that Courvoisier is the most recent acquisition. Which spirits, which geographies are you still interested in building up through M&A, Bob?
Yeah, I mean, M&A has been great. In my tenure, we've done 27 deals, over 4 billion euros. And as you said, totally changed the company. Now we've got 4 with cognac, very serious legs, tequila, bourbon, aperitifs, and now cognac is coming. We would continue looking forward to, premium aged dark spirits, ideally whiskeys, with a great skew to the US and to Asia.
Yeah, tell me about that skew, because it seems that with the Courvoisier purchase, you're increasing your exposure to the United States. You talked about there wanting more exposure to the US and then again in Asia. Both of these economies having strengths and weaknesses. What is it about those markets that you want a piece of at this point, Bob?
Well, there are two things. I mean, the U.S. is the largest profit pool in our industry, and although it is our largest market, we still have a lot of opportunity to grow in that great, highly profitable market. On the other side, Asia is actually our smallest region. It's only 8% of sales, and clearly, there's great growth from a demographic standpoint, from consumers premiumizing, moving to imported spirits, and we'd like to have our piece of that.
Bob, Kriti Gupta in London, thank you again for joining us. Let's talk about the tour around the world that we started with the U.S., Asia. Let's bring it back to Europe here. You have a 20 percentage point margin difference between Northern Europe and Southern Europe. There's talk about merging the two. Why do that? Can you walk us through the logic? Do you expect the kind of really strong Northern Europe margins to seep in to Southern Europe?
Well, actually, I mean, there's no difference in marginality between Northern and European and Southern Europe. The difference is that the way we report the headquarter costs get inputted to Southern Europe. So, let's put that aside. We're very profitable in both North and Southern Europe. The logic in putting them together is really about having commercial and marketing synergies. Let me give you, for example, the idea. Clearly, in the summertime for the aperitifs, we'd like to leverage all of the Mediterranean coastline and the islands to activate our brands and recruit new consumers. Now, in the past, it was the Southern European markets over-investing in that and the Northern European markets getting the benefit. Clearly, merging them together takes away any of that disparity and creates a lot more harmony, a lot more focus to do the right things for the bigger whole.
But Bob, how does that affect pricing then? Are you concerned at all about some sort of upper bound in terms of appetite for actually paying for some of these products, especially in Southern Europe going into the holiday season?
Look, we've taken robust pricing in the past 2 years. We've taken about 15%, and we've repositioned key brands such as Campari and Aperol. I think going forward, we will, as we, declared it yesterday, come down to more, I think, numbers reflecting inflation in 1 to 2%. And, consumers are willing to pay for quality, and we see that. Despite the price increases, we've grown double-digit across the board.
Well, can we talk a little bit about Aperol? I'm asking this question for a friend, namely my wife. I was in Italy last week before last. You can buy their pre-mixed Aperol. Aperol's had a pretty good year. What was it, up 23% year on year? What else can you get out of the Aperol brand? Is the premix? How is the premix going? Is that something that you can roll out elsewhere? How do you evolve this brand, or at least develop this brand, to give you a bigger punch coming off it?
Well, look, we bought Aperol 20 years ago, and every year it's grown double-digit. And I keep on repeating that we're only at the beginning of the Aperol story, and that the orange wave will turn into a tsunami pretty soon. Aperol, with the Aperol Spritz, sources 3/4 of its volumes from beer. If we take the most highly penetrated market, which is Italy, our per capita consumption of Aperol Spritz in Italy is only 1.2% of that of beer. Now, if we set Italy at index 100, the next market only has 45% of the penetration of Italy. If we look at the largest opportunity, the US only has 4% of the penetration of Italy. And I'm not even talking about what we can do in Asia and in South America and many other countries. So we're really at the very beginning of the story, and we focus on one drink only, the Aperol Spritz, and the perfect serve, and that is working. I mean, 20 years down the line, growing 23% across double-digit growth across all markets. I'll buy that anytime.
Bob, just before Anna jumps in, these two are not convinced about the Aperol Spritz. I'm just going to put it out there. I don't know, there's some education that needs to happen here.
Well, it sounds like Bob thinks it's a great growth opportunity, so Chrissy and I maybe will have to go and rethink.
Well,
just briefly on marketing spend,
try
Bob, I wanted to ask you about
the Campari Spritz.
Okay, maybe. Let me just ask you about marketing spend. Last year in Europe, the weather meant that I think you had to pull some of your marketing. It just wasn't the right time. It was too hot. What can we expect from marketing spend this year?
Look, our marketing spend will normalize. It'll be between where we've always been and where we were last year as a percentage of sales. Clearly, we're a very agile company, and we'll be able to adapt it according to the opportunities. I mean, we will seize every opportunity we have, because we know that as soon as we activate our brands, create our events, put liquid on lips, there's a great return to that.